Good morning, it's Harvey Jackson. We're just going to get through some of the canola export numbers, but first off, the Canada Global Trade Gap narrows. Reuters publication put out yesterday, I believe, or today earlier. They were talking about the export numbers with the U.S. rose 1.1%, accounting for just 67.4% of total exports compared to 76.2 a year ago. So this tariffs and the friction that's going on and what you know it's still significant, but there's a large amount of it actually was metals that went into other countries as well. The first time in 3 months that outbound shipments to the south increased in percentage terms, but the share of the exports to the U.S. shrank to the lowest levels since data collection began, except for a couple of months during the pandemic. The share of exports to the U.S. was 68.4% in November and 67.5% in October. Share of exports to the U.S. on a full year basis dropped 72% in 2025 from 76 a year earlier. This is more likely an indication of a trend than a single month movement. Imports from countries other than the United States fell 3% in December, and Canada's trade deficit with countries other than the United States narrowed to $7 billion in December from $9 billion in November. So that's significant. But then I started drilling into just here's your canola seed. So where did we export? And I did put up percentages here, and percentages they're still fractions, so it's not perfect. But of the countries listed here, 6% of it went to UAE, United Emirates. Netherlands took 3%, France took 12%, and Belgium took 2%. So you could see that if you're going to add them all up, there a significant percentage there. Mexico sitting at 21% and Japan at 31%. So you can see that they took 6.3 or yeah 638,805 metric tons. So and then this is to the end of December, of course. So you can see who is the biggest, and it looks like Japan by far, right? But this is our canola oil exports, and of the countries that are listed, it's 83% going to the U.S. And you do have others: Colombia, Korea, Malaysia, Mexico, Netherlands. And the meal, 69% to the U.S. of the countries that are listed. France, Netherlands, New Zealand were the tops. Indonesia says to get a 19% tariff on most goods in the U.S. deal may get exemption for palm oil, but it also says nearly 1,700 commodities may get this exemption. So carving out deals, and I keep on saying if there's USMCA or CUSMA, or maybe it's MUSA or whatever, if you're in Mexico, but there could be significant carve-outs as well. Dry down in there and causing lots of concern of wildfires and big winds there too. Soil moisture in Western Canada, there's some percent of normal is actually not great. And you can see that this whole region is fairly dry. Not that you need to be concerned about it just yet. Cold to the north and lots of wind and some winter storms. You can see that that's what's happening with the live radar here. Canola is down 4.30 on the front month, $5 in November at 6.68 and 6.83 respectively. Rapeseed is 4.91, down $1.75 per metric ton. That's euros, of course. Soybean oil is down 0.63 of a cent at 59.05. Palm oil down 30 ringgit at 4,063. Crude oil is basically unchanged at $66. Soybeans down 2 3/4 at 11.38. Spring wheat down a penny and a half at 5.81. And your hard red winter unchanged, but your Chicago wheat is up 3 1/4. And your corn is up 1.5. And your Canadian dollar is just slightly on the green. So here we are, just zoomed out view, and maybe I'll explain how to use this as a using slow stochastics as well. So here you would be selling, and here you would be a buy, but you'd get out of your sold short in this place. So we're waiting. If you're going to just use these areas as signals, you would be buying here, and then waiting for this to cross over to go short into the next move. Here's your canola futures for May, and it's above the 200-day moving average. Above the 200-day moving average is a bullish signal, but if you're looking at the same scenario there, we're looking to when to go short. If we're just going to use those stochastics there. November, here's your rapeseed, and it's if we're looking at the bigger move, approaching the 61.8. Soybean oil futures just still on fire, red today, and your soybean futures at the 78.6 retracement value. Palm oil in the middle of that range. Crude oil is off rate at the moment, but if we're going to continue to have some pressure with the Iran conflict there, expect some issues there as well. Canadian dollar leg down and up against some short-term moving averages there. And U.S. dollar is going the opposite direction. Of course, gold futures up, silver futures is up as well. Anybody that's, I would, if you have physical silver, look at when we get back to $100 to sell physical silver for sure. Wheat, nice couple days of green. Currently, at the moment when I took the screenshot, it's not showing green, but the other two commodities are. So Kansas is green. And broke above that 200-day moving average and broke out of that trend and made a higher high. All of those are positive signals. Here we're trying to make a higher high. We're up against it right now on the Chicago and above the 200-day moving average. Milling wheat, nowhere close. Neither was Kansas or Minneapolis, I should say. Corn having a cap on it on these previous lows were made is now seem to be resistance. There's a cattle on feed report, I think, comes out today after the market closes. So expect the market to get, or the cattle to get some market direction from that. Expectations are still in the 90s as far as placements, I think 94 or something like that. But and one of the benefits of higher price beef has been the hog market is close to that $100, $97 to $100 mark, which is good. And that's all I have for you today.